Hello, it is the 10th of July 2012. Before we get on to the silver charts, let's take a time machine, travel back to 1992. In the year 1992, I was starting my senior year of high school, or as Canadians would say, grade 12. And if I was to be given a exercise like this in 1992, asking in 20 years from now, how much will the following three cost? A domestic car, a fast food lunch with a side and a beverage, so an okay lunch or dinner, and of course the minimum wage. Now, if I were to guess, I would see things are doing better than tripling. I would probably say about 52K, which of course is wrong. As far as the lunch is concerned, I'm going to go about $15, and we'll just do a normal triple. We'll say $18 per hour. Now, what we're seeing is that the domestic car has pretty much doubled, and in this area of the neck of the woods, about 35,000 or so. It's about a 100% price increase. This is pretty much done better than double. It's now pretty much around 10, 11, 12. And minimum wage is 10. So it really hasn't doubled too much. In fact, a lot of the reason within this economic recession slash depression that we're in is because wages are it's like what's the stagflation basically, as wages are not going up in coordinates with all other costs. And then when you throw in different taxes, we were just starting to pay a lot larger amount of tax at the start of the 1990s as I throw in the GST, goods and services tax, which is now known as a harmonized sales tax. A lot of inflation. But the whole point was, it's not like it's a surprise that we're in this type of situation. It's not like this hyperinflation, this thing is anything new. Heck, I remember 1992 when they told us that in the 1920s, people were making 20 cents an hour and 10 cents an hour, or a dollar a day, that, well, the value of the dollar used to be something, or it's just getting out of control. Let's move on to the silver charts. We'll start off with the daily chart, and it's pretty much a mess. I've talked a lot about this. It's got to get above this 18 moving average and all that type of jazz. It's not doing it. It's staying within it, and now the 18 average is in a declining facet right now. But again, when it goes above it, it needs to either have a huge break above it, which hasn't happened. Maybe breaks above it like this, come back, find support, and lift higher. Again, that hasn't occurred yet. So since this bear market started on the end of February, it has obviously not done that. The only time it's ever really had decent closes above it was this one in here. Yeah, there was a few. There's one here. Then there was two this earlier, but it hasn't even done anything of that nature there. Also, as we move into next week, this is a 100-period chart, 100-tick chart. I'm going to lose out on this high, which is basically telling us that the duration of this bear market is about to exceed 100 business days worth of trading. There's 125 and a half year, basically 250 in a year. So this is approaching a half a year bear market on the intermediate term time frame. Okay, so let's now move this on to the 5-hour chart, and again, another messy chart. If you watched my video yesterday, I was talking about how I make my charts, and I'm making it, yesterday I was making it right here at this top. And I was saying that it was probably a good time to go for a quick short with a sell objective right around 27.25. So that was a gain of about 25 cents. And it obviously came through. But what was important was how this 27.50 was going to react after it was once support in here and it broke down below in here, because future support then becomes resistance. And it even resisted it earlier today, establishing just a little bit of support in here. But overall, really the 27 even mark is big. However, the 29.91 high, which is not even on this chart, just briefly before this, for that selling to be a failed move, which ended here, it needs to hold and stay above this line. And, well, that didn't happen. For it found resistance here, which was pretty normal. And then a second hit, nothing unusual about that. And then it comes back down to this level, which, again, nothing unusual. But on a bullish level, it didn't do what it was supposed to do, and that was make a high up here, maybe come up here, make a higher low, and then test this level again, where it can either break it here or do something like that. That's the type of movements that you were looking for after this went from point A to point B. So now on the breakout, question is, how well is this thing going to be resisted? And as long as it's staying below this, not only is it not a failed down move as of now from point A of 29.91 to point B, but the bear market is in fact continuing, and no surprises should be given as of yet or as of now for any major down moves that gives us either A, another test of the lower 26 level, or B, a break down even further below that. Moving back quickly to the daily before we end this again, it's in a mess on this daily time frame. That there's no guarantees that it's just going to plunge from here. After all, it's in this neutral band, and as I've stated, for this thing to break through, I need to see a few days break holding above it. I need to see a decent move above it, successful support after it breaks free, meaning if it would have found support here and went higher, that would have counted. But of course, it found resistance at the band in here. And until that happens, it's still in this bearish market, which is not that volatile at all overall. In fact, it's hardly volatile at all. Thank you for tuning in.